This is the one strategy that works on all pairs, whether currencies, indices, boom and crash. On boom and crash, whether you're trading ticks, whether you're trading spikes, the moving averages work on all those. So the moving averages, what we're going to be discussing today, we're going to be discussing how to determine the trend. We're also going to be discussing the entries, and I promise you, it's one of the best. Right. So if you like this kind of content, like, subscribe, and share. If you like this video, it helps the YouTube algorithm push it out to more people, so that it can help. This video can help other people that want to know more about these strategies, right? So stay tuned, and I'm going to show you exactly how you can make money whichever market you are trading. It's actually the best. You can make lots of money using this, and it's simple. You don't even have to draw even a single trend line, right? So right over here, what do you have to do, right? So let me just show you how you can set this up, right? So I'm using 3 moving averages for now in this video, right? So why is the moving average strategy the best, right? Most probably I will say that, yeah, it doesn't repaint, it's the best. I just like using it, and also because I'm a BTMM trader, I use BTMM whenever I'm trading, right? That's the core. So it's like my core strategy, right? So that's why I absolutely love moving averages, right? So how do you set this up, right? So firstly, I'm going to be setting the moving average period of 13 exponential apply to close. Then it's the red one on my chart, right? Then I'm going to click done. Then for the second moving average that I'm going to be using, moving average period 50, right? Then I'm going to set it to black 50, not 150, right? Then click done. Then for the third and final moving average that I'm going to be using today, I'm going to be using the 200 moving average, and I usually like to set it to purple. I don't know why I like purple. Maybe it's a royal color. That's why I like it. So then I'll set it to purple, right? Then click done, right? So now I've set up all my indicators, right? So how do we determine the trend using these moving averages, right? So to determine the trend, we just check for the 250 cross, right? For the black and purple cross. So right over here, the cross is going forward for an uptrend, which means that the market is now going up, or essentially we are just looking for buy setups, right? So that's how we determine the trend. And whenever it crosses for a sell right over here, we look for a sell setup. Is a signal that the market is going down. Like, check for this example over here. When it crosses down, as you can see, it gives us multiple entries for the downside, right? So that's how we check for the trend. Then for the consolidating market, who doesn't know? Who can see if the market is consolidating? Are you blind? Right? But okay, for the consolidating market, we just have to know that the moving averages, the 50 and the 200, they will be flat. They won't be pointing either down or pointing up. They will be just flat. So like this, for example, right? They are flat in this example over here. It's not pointing anywhere, and the candlesticks keep crossing up, below, up, above, below, below the moving averages. They are not showing a clear trend. Of course, we're gonna see that. I don't think anyone is blind enough not to see it, that the market is consolidating, right? But that's what we'll be using right now for our entries. How do we enter, right? I'm also going to be showing you. Okay, so let me just show you right now. If the market is truly trending, right? If the market is in a real uptrend or a real downtrend, let's take this for example. This over here. Whenever the market is in a true trend, the candlesticks don't close below the 13 moving average, which is the red one, which is the red moving average on my chart. So as you can see right over here, right, when it crosses the 13 moving average, the candlesticks, yeah, they form wicks here and there, right, but they don't close below the 13 moving average. When they close below the 13 moving average, you can see it went even for a deeper retracement, right? So if the market is truly trending, it doesn't come below the candlestick doesn't close below the 13 moving average. Yeah, most of the times they can come back and test it, right, but they don't close below it, right? This over here, it closed, but it was still in an uptrend, right? So that's how you determine the trend. This usually works also on boom and crash, and I'm also going to show you a neat trick that you can use to catch spikes using this moving average. It's actually lit, right? I can't wait to show you all that I'm talking about, right? So right, like for example over here, we're in an uptrend, right? This pullback, it doesn't close below the 13 moving average, showing that the market is still in an uptrend, right? And when it closes below the 13 moving average, it went even for a deeper retracement. So what does this mean? If you're in your buy, right, when it closes below, you just give it an allowance of one candle. If it creates another candle, then you have to exit. It's just a clear signal that the market might reverse at any point. And if it doesn't and goes back above the 13 moving average, you can jump back in the trade, right? So that, but you'd have avoided losing all your money, right? So now for our entries, how do we enter, right? We enter only in line with the trend, right? So in this example, our moving averages have crossed for an uptrend, right? So we are only going to be looking for our buy opportunities, right? When do we buy, right? For our entries, we are only going to be using when the candlesticks pull back to the 50 moving average, right, for these examples, and for the 200 moving averages. For the 50 moving average, we like it when the candlesticks just forms one leg, and then for the W, or for the 50 moving average, it can form a W or just one leg, but when it pulls back to the 200 moving average, it's better if it forms some sort of W, right? If it just one, it's not that effective, right? So right over here, right, this doesn't touch exactly, but somewhat what we are talking about. So it's so like what a head and shoulder, right? As you can see over here, right? So forms sort of what head and shoulder pattern, right? So for our entries, as you can see, since the moving average is crossed for an uptrend over here, we've got how many entries, right? So we've got this one entry over here, that's one, that's two entries, three entries, and then when it came back here, 4 entries, 5 entries over here, 6, and then it shot back down, right? But you'd have been in profit, right? So what do you have to look for when they pull back to the 50 moving average or the 200 moving average, right? So when it pulls back, right, we're only going to be looking for candlestick confirmations, right? So for this example, we've even got a small W. If you drop down to the 5 minute or the 1 minute, this would have been a small W over here, right? And if you drop down to the 5 minute, this 50 moving average will be the 200 moving average. I don't want to go that much in depth. As I said, I'm a BTM trader, so moving average are sort of kind of my thing, right? So I don't want to go much into depth, but I've got this small W over here. So after we form that W, right, we've got our candlestick confirmations. We've got our candlestick confirmations, right? So when do we enter? We enter when the candlestick close above the 13 moving average, right? So we enter on this candle right here. That's solar doji formation. I know that's not a favorable condition to enter, but that's when our entry point is, when the candlestick closes above the 13 moving average, right? And you hold that trade, right? Again over here, when it pulls back again, right? You enter when it closes, pulls back to the level 50, right? When it closes above the level, above the 13 moving average, like over here, that's when it closed, right? This candle closed above. We enter, and as you can see, we went into profit, right? Though there are some pullbacks, right, over here, right? So, but what do you have to know about pullbacks? Pullbacks are just an opportunity for you to enter more positions. So I don't like people who hate pullbacks, because they're just an opportunity for you to enter again, right? And if you had missed that opportunity, that trade, it's just another opportunity for you to enter, right? So that's what you look for, right? Then for the sales setup is just the same thing. It's just the opposite, but it's just the same thing. Now let me go to boom and crash so that I can show you how this strategy works, right? So for boom and crash, it's essentially one and the same thing again, but I just wanted to show you how you can catch spikes using this strategy, right? So right over here, I'm going to be dropping down to the 1 minute time frame, right? So let me just check where the market was in an uptrend, right? So over here, so our candle, so we crossed over here, right? So that's when we crossed. after we crossed for a buy, right? We enter when the candlesticks pull back to the 13 moving average or 50 moving average, right? Or even the 200 moving average. But for the 200 moving average, wait for the W that I mentioned, right? So you want to see that W formation, right? So whether it's ugly or not, we just want to see a W. We don't care. We don't give a yeah, right? So right over here, right, when the market is just trending, as I said, the candlesticks don't go below the 13 moving average, right? So when they go below the 13 moving average by 2 or more candles, so let's say you entered when the candlesticks pull back to the 13 moving average, right? If they increase 2 candles, you have to close that trade and wait for you to enter again when it touches the black moving average, the 50 moving average. That's when you take another trade, right? So that's how you use this strategy, right? So this will make you catch sniper entries, and just practice this on demo first before you go live, right? And leave your comments in the comment section down below on how you found that strategy, right? So if you if you'd like to try this, just comment in the comment section below that you are going to try this, so that I know that I've done a good job in order showing you this strategy and teaching you this strategy, right? So that's it for this video, guys.